Well, good afternoon. Happy Friday, January 31st. Mark Milam here. Let's get right to it. A month in the books now for 2025. Man, time flies. It's been a busy month, too. We saw the inauguration of a new president and all of the executive orders that come with that. We certainly know there's going to be a lot of change in policy across the country, but also as it pertains to housing. We'll talk about that here in a minute. But first, let's get to the week that was at hand. We actually saw mortgage-backed securities improve slightly on the week. No big moves here, but we are finishing out the week slightly better than how we started it. We got a measure of inflation today. The Fed's favorite measure, personal consumption expenditures, came in right on target. No big news there. If we go back and take a look at yesterday, we can see that initial jobless claims came in under expectations. But the big meeting was on Wednesday where the Fed gave us an announcement on Fed policy and did not alter the Fed funds rate. But here's the statement from the Federal Reserve meeting, and this is important to pay attention to because you can see right here in sentence 2, the Fed begins referencing the unemployment rate and labor. And this tells us that the Fed is really focusing in on the labor market for its guidance moving forward. And they dropped the language that says they've been making steady progress on inflation and just simply said inflation remains somewhat elevated. It does appear that the Fed has begun to accept the fact that maybe we're not getting back to 2% on inflation anytime soon, and we're going to be hovering between this 2.5% to 3% range on inflation, and that's just where we're going to be. And their guidance for future Fed rate cuts is going to be in the labor market. If labor remains healthy enough and we don't see some significant cracks and we don't see joblessness skyrocketing, the Fed is likely to continue to hold the Fed funds rate steady right where it is and tolerate inflation in that 2.5% to 3% range. If we see the opposite happening, we see unemployment ticking up and we see joblessness rising, well, then that will prompt the Fed to begin cutting the Fed funds rate again. But I think the Fed has learned its lesson. It began cutting on September the 18th and went through a couple of rounds, and we saw the long end of the yield curve, which really impacts mortgage rates, start to go up dramatically, meaning the market was effectively rejecting the Fed rate cuts, saying, hey, you're cutting too much and cutting too soon. We're not sure inflation's all the way back in the bottle. Hang tight. And the Fed appears to be listening to the market in this regard. So for the time being, though he might be under some pressure, perhaps politically, Fed Chairman Jerome Powell is holding steady with the Fed funds rate and the rest of the board following suit. Let's take a look at what else is going on. We saw a renewed effort on the part of Republicans in the Senate and in the House to defund the Consumer Financial Protection Bureau. This is a bureau created out of the mortgage meltdown, the Great Recession, that is in charge of enforcing qualified mortgage and ability to repay provisions. They wouldn't, to be clear, it wouldn't get rid of those provisions, but this is the entity that's in charge of enforcing them, along with a whole bunch of other protections for consumers from financial agencies. So this will be fascinating to watch as we move through the subsequent months. How much traction does this gain? It's very, very early in the process. Probably unlikely to see a complete defunding of the CFPB, but we could see perhaps a streamlining so that the burdensome and harmful regulations on American businesses, banks, and credit unions are removed. That's language from Senator Ted Cruz. And then finally, Highland Mortgage says goodbye to one of its own this week. We are sad to report the passing of Deb Simonet, who has been with us since the very start, one of the original members of the start of our company, and many of us have known Deb for decades, and she will be greatly missed. What a true legend and an inspiration in our business. We love you, Debs. Have a good weekend, everybody.